Hello everyone, my greetings to one and all. This is the fifth session of rural development as a challenge faced by the nation. In the previous session, you have learned about cooperative societies as a source of credit to rural masses. I am Poonam Vohra from Egypt Economics Learning Center. Though cooperative societies are one of the best sources of credit flow in rural areas, they are faced with several challenges. So let us analyze the problems faced by cooperatives in providing rural credit. Cooperatives are faced with deterioration in the financial soundness because of the poor governance. And poor governance is because of various factors. Most important is lack of compliance with the legal provisions of State Cooperative Societies Act, transparency in grant of loans, audit, internal checks and controls, recovery of dues, recruitment of qualified persons are some of the issues that needs to be taken care of for efficient functioning of cooperatives. There exists lack of professionalism. The quality of human resources is an important determinant of the success of any organization, but this aspect has not received due importance in the cooperative institutions. The cooperative banks are headed by a committee of elected members who are not professionals and do not possess sound knowledge in banking functions. Also, cooperatives do not have HR policies in crucial areas like recruitment, placement, training, career progression, and so on. These are done without any objective or systematic manpower assessment. So, lack of professionalism lead to inefficiency and low productivity. There also exists inadequate financial health, which is mainly due to the reasons for inadequate financial health are frequent loan waiver announcements by government, growing non-performing assets, non-implementation of adequate and foolproof internal checks and controls resulting in frequent frauds, absence of audit mechanism and poor resource base. All these contribute to the declining performance of cooperatives. Then there is lack of member participation. The cooperative structure should be member driven. However, members have voting right but do not take active part or show interest in the affairs of cooperatives, since control and management is vested in few members only. Besides, the depositors whose money is intermediated by the cooperatives have no voting right or any say in the management. That has to be taken care of. Then cooperatives have not been keeping pace with the changes. They have not adapted themselves to rapid pace of changes in the financial sector and have lagged behind in cooperatives have lagged behind in designing of new products and services, in adoption of technology and advanced management practices that have changed the face of financial sector in post-economic liberalization era. As a result, they are unable to cope with the stiff competition posed by other banks in rural finance and retain their market share. Then there also exists duality of control. Under the Constitution, cooperation is a state subject governed by the respective State Cooperative Societies Act. So registration, incorporation, management, election, audit are all governed by state acts. But some aspects relating to banking activities are regulated and supervised by NABARD and Reserve Bank of India under the Banking Regulation Act. So there is an urgent need to remove this overlapping control and endow functional autonomy and operational freedom to cooperatives. Despite these problems, cooperatives clearly remain the major source of agricultural credit to small and medium farmers in terms of number of borrowers and size of individual loans. Now, assess yourself. Read the following information and answer the simple question as asked. One of the biggest concerns affecting the functioning of regional rural cooperatives is existence of high overdues and poor recovery of loans. So the question to you is, give 3 reasons for poor financial health of rural cooperatives. Please check your answer. The 3 reasons for poor financial health of cooperatives are: 1. Operational inefficiencies leading to increasing operating expenses. 2. Low level of deposits and heavy sanction of loan without checking the credit worthiness of their customers. And 3. Low repaying capacity of the customers. To conclude, despite the phenomenal outreach and volume of operations of financial institutions, their health has deteriorated significantly due to poor governance, infrastructural weaknesses, operational inefficiencies, political interference, and low resource based. All these resulted in poor loan recovery. There has also been poor loan recovery, regional disparities in the sense that share of credit in eastern and northern regions is much lower as compared to other regions. Then there exists interpersonal inequity, that is, formal credit is not equally accessible and affordable across gender, class, caste, etc. All these factors have resulted in poor financial health of rural financial institutions, making them ineligible for refinance from NABARD. I hope you have understood the challenges faced by the cooperative sector so far as rural credit is concerned. With this, the session comes to an end. The next session would focus on measures adopted by the government to improve the credit flow. Till then, keep reading, keep learning, and keep updating yourself.